Well, let's turn to our next topic and headline of the month. And Tony, we need a crown here for you. You have been hitting it. Last time, this was before the elections in Massachusetts. Tony said health care reform is going to go down. Now, of course, it's been
now. Yeah, I may be wrong about that.
Well, we'll see. What's your headline of the month?
I'm not sure on headlines what will happen. I think one of the things that I would point out, sometimes we talk about what's getting a little bit of attention, and people really, it's kind of an undercurrent. People aren't talking about what might that issue be. And I would surface commercial real estate. When we talk about entrepreneurship, the number one driver of entrepreneurship, and Nick, you jump in here, is the need for capital. And so that capital has to come from investors. Ideally, it used to come from local banks. Banks are really being squeezed. What we're seeing in our economy is a very, very soft commercial real estate market. Now, commercial real estate is somewhat the gold standard for community and regional banks. If you look around the country, any bank, whether it's a national bank, a regional bank, or a community bank, has a nice building themselves, and they have excess space that they lease that commercial real estate, and they often put their money into commercial real estate holdings. Commercial real estate is very soft. You're going to see more defaults there, and because of that, you're going to see more bank failures, and because of those bank failures, you're seeing a tightening of the credit supply, and that's weakening capital supply to entrepreneurial marketplaces.
That's a pretty big headline.
And that's very, very linked to the. I don't know if this is the headline that we're going to get, but I'm always optimistic, so this is the headline I'd like. But the startup funding goes through the roof. And that's the headline I'm waiting to see, because exactly as Tony said, this is the interesting period of time. There's huge amounts of innovation going on. The recession is actually a great period of time for innovation and new ideas. And I think everybody's saying this has been a particularly big one. There's a number of consumer habits which are changing out of this, that we're going through a huge change in how people are using products and using technology. Marketing is changing dramatically. I mean, Facebook now is a very important, advertising medium. It wasn't before. So the world is changing. There's some great businesses coming out, some great ideas, but they're struggling for funding.
Now, how would one of our viewers out there, how would they be able to take advantage of these startups? I mean, obviously, you have an ability to do it, but what about just the average Joe and Jane?
In terms of being able to take advantage of them financially, I guess one of the key things is through angel investing. I mean, there are organizations across the country. Nebraska has an angel investing group. And that typically works very well because people join together and they jointly then help co-fund the early part of a
So how much
business.
money, what's that minimum that an angel investor could get in there with? What do you think?
A typical angel investment, especially in this region, is about $200,000 to $300,000, that sort of area. But that maybe is across 10 people.
Okay,
so we're talking about $25,000 to $50,000. That would be a typical local angel investment.
Most of our viewers have that kind of money laying around. I mean, we have well-to-do listeners or viewers, right, Tony?
Right, absolutely.
Creighton students, Creighton alums.
One of the aspects of that is that that's a fairly reasonable startup kind of investment, but you need to be aware that those are high-risk investments. I mean, there's high return potential, but you don't. If you only have $25,000 to invest, you don't put it all in a startup. You want to diversify and have some bonds and some blue chip stocks first. So.
I think it'd be fair to say that would be literally, startup funding investment would be 5 to 10% or less of your investment
of
portfolio.
your portfolio.
Yep.
But now, okay, my headline of the month is. I think we got more to fall on the housing front. You turned to commercial realty, Tony. I think on the on residential, I'm sorry, I don't think prices are going to come down, but I think we're going to see more defaults. We're going to see more problems in the banking sector. Fannie Mae and Freddie Mac, I mean, they've been underwritten by the U.S. government. That's all of us. We're underwriting that those two organizations. It's going to be costly. I mean, to the tune of $400 billion as much.
So I was just thinking, I mean, we're in a tough situation here. We're gradually, I mean, we're seeing some returning of confidence. Companies are starting to post some decent profits again. Customers, I think, are feeling a little bit more confident, consumers in the market. What would you do, Ernie? What would you do if you were in charge? What would you do to help the recovery build a new foundation? What would be the top 3 priorities?
Okay, I think I would keep the 2001-2003 tax cuts. I would draw a line in the sand and say these cash for whatevers are over. Go out there and buy because you need the product. I think the bailouts end of the bailouts. So I think tax cuts keeping the 2001-2003 tax cuts. I think also mark to market needs to be put on the shelf, which it has been effectively, but that was one of the real big problems. Mark to market, which meant banks couldn't lend. I think we need to raise interest rates. Believe it or not, that's a strange one. That's contrary. What banks are doing now is they're able to borrow from the Fed at 0.5%, or less than that in some cases, half to 75 basis points, 3/4, and lend out to the government at 3.6%. So they're not lending to the Ernie Gosses, to the Nick Hudsons, to the Tony Hendricksons. They don't have to. Why take a risk with us when they can lend to the government?
Yep.
So I think we need to be raising those interest rates. That's a contrary. It doesn't make a lot of sense to some folks, but it needs to be done, in my view. Begin raising rates, but also to Tony's point, inflation still is an issue now and in there. So I've got concerns there, you know.